Hi, Rebecca Lang here with a quick market update on June 21st, the first day of summer. Yay, summer! As I've been speaking with potential home buyers and sellers throughout the spring market, I've still been hearing a lot of mixed perceptions of how people think the Toronto real estate market is performing. Some folks who only catch the occasional headline number about the big year-over-year declines in number of sales are interpreting the drop in volume to mean that the market must be sinking overall and that prices are on the way down. Similarly, some folks who have been watching listings in their 905 neighborhoods sustain multiple price drops and/or multiple months on the market come to believe the affliction has spread throughout the 416 as well. Conversely, active shoppers in the core who are witnessing, for example, a third of houses selling for at least 10% over asking, or are seeing the exact same condo selling for 15% more than they did a year ago, are telling me the market is still a tad too toasty for their liking. So while clearly some of the mixed impressions relate to the mixed performances of differing geographic areas, some confusion also relates to what the data is actually showing. To help provide some clarity, I'm going to walk through 4 key statistical trends in the Toronto market and explain what they mean. First, let's tackle prices. Average Toronto sale prices are up over 12% since the beginning of the year. And while that might sound awesome for homeowners, the more meaningful trend to examine is what's been happening with the HPI benchmark. As I've discussed a few times before, the HPI strips away the skewing effect of really expensive or inexpensive homes that might sell in one particular month and gives us a better understanding of what's actually happening with home values. For detached homes, the benchmark value has been gaining a little bit each month and is now up 4% since the start of 2018. Worth noting is that this is an average benchmark value across all Toronto neighborhoods, and some communities have shown much more price variability than others. The other major housing category that's top of mind is condo apartments, which are up 7% for this year based on their benchmark price and have displayed more stability by neighborhood. Overall, the values of both categories are bullish but not exuberant, which is a healthy sign for the market. Second, let's take a look at the number of active homes for sale on the market, which has been on a steady upward trend since January's count of 3,460, building to today's count of 6,342. While more listings means more options for buyers and more competition for sellers, this is a seasonal trend that we see in most years. That said, there are a couple of things to examine a bit deeper. First, the congruity between what's on the market and what's in demand is still not great. For instance, a quarter of the listings on the market are over $2 million, but only 10% of sales are in that price range. And along the same line, there's still not nearly enough Leslieville semis coming for sale and about 5 times more Willowdale detached homes on the market than needed. While overall active listings have continued to uptick through to today, by this time of June, we traditionally see this trend coming to an end. The summer months are usually slow for new listings activity. The quality also tends to diminish during this time, and I see no indication that this summer will be any different. Thus, if I were a buyer hoping to make a move before the new school year starts in September, I'd be seriously looking at the options out there this week and next week before the selection starts drying up into July and August. For the third stat, let's take a look at the big number that you hear mentioned all the time, which is the number of sales. So far in 2018, total monthly sales have been slowly creeping upwards month over month, from the frigid low of 1,510 in January up to 3,092 in May, and partial month sales for June pointing to a continuance of the same trend. The good news is that this pattern is consistent with what is seasonally expected in the Toronto market. Also good news is that the huge gap in monthly sales between this year and last year is finally starting to close. The bad news is that monthly sales volumes are still coming in much lower than they have been in years. Also, the reason the one-year gap is looking better now is because you've now had a full year of sluggish activity. Setting all this aside, a valid question to ask is whether sales volume is really that important to the individual buyer or seller. The answer is that although sales volume certainly has an impact on the overall economy and on government revenues, and although volume is commonly reported in news headlines, it's really not until it's compared with the inventory levels from statistics number 2 that this becomes useful for the typical buyer or seller. So, let's reserve judgment until we tackle the final stat, which brings the inventory and sales volume together. Dividing the inventory by monthly sales gives us our fourth stat, which is months of inventory. Months of inventory is the measure of how long it would theoretically take to sell all the listings on the market based on the current rate of sales. It's also typically used to determine whether it's a buyer's or seller's market. For detached homes, we've witnessed a drop and then a recent uptick back to 2.9 months of inventory, which is pretty close to a balance between buyers and sellers. This small jump for May isn't alarming in itself and isn't imminently going to change the market dynamics, but it is a trend to watch, particularly once we've passed the summer months. As for the condo segment, which has done a lot of heavy lifting in the past year to keep the Toronto market moving, we see months of inventory fluttering between 1.5 and 2, which is indicative of a market that continues to be moderately in favor of sellers. With these 4 key statistics, I think it paints a pretty fair picture of the overall health of the Toronto real estate market, which has elements of strength and moderation that balance each other out. I'm going to save speculation of where we go from here until the next video, as I'm hopeful in the coming weeks we'll have more insight into the new Ontario government's regulatory plans for the real estate market. While I doubt there will be any changes that will lead to a significant short-term swing, there have been potential policies floated by the government-elect that could certainly lean the market in one direction or the other. I'm also hopeful that we might soon gain some clarity on NAFTA and the apparent global trade war now underway, but I'm probably hoping way too much. In the meantime, please get in touch with me with any of your real estate questions or needs. You can reach me directly by phone or text at 416-357-1059 or online through rebeccalang.ca. If you like this shorter video format and different analysis, please hit the like button below, please leave a comment, and then please get outside to enjoy our glorious summer. Until next time, I'm Rebecca Lang, Toronto Real Estate Broker.